You know it's election season when Democrats start asking Republicans their age-old question on tax cuts. Well, how are you going to pay for that? Well, I'm here to tell you that marginal tax cuts do not have to be paid for. Tax cuts do not cause deficits, and tax cuts stimulate economies each and every time they're tried. And if you want some ammunition to clobber your liberal tax and spend friends, then stick around because I'm going to get into it. Hello, and welcome back to the channel. My name is Rich, and in this episode of RPW Media, I'm going to explain how you can tell liberal Democrats to stuff their tax and spend arguments where the sun doesn't shine and debunk their argument about tax cuts having to cost some. Democrats always argue against tax cuts, claiming that they create deficit spending and cause a lot of problems with the economy. What they are really saying is that they want to spend as much of your hard earned money as humanly possible, and that tax cuts take away their ability to buy votes with their spending program. And if they tell you anything different, trust me, they are lying to you. Now, what is a deficit? Well, the dictionary says a deficit is the amount by which something, especially a sum of money, is too small. Now, if we want to get technical, let's look over here on the right where it says within the budgetary process, deficit spending is the amount by which spending exceeds revenue over a particular period of time, also called simply deficit or budget deficit, the opposite of budget surplus. Okay, so that's the definition of a deficit. Now, in 2019, the Heritage Foundation ran a piece called How 2 Years of Tax Cuts Supported Our Strong Economy. Now, this was during the Trump administration, remember, when his tax cuts and tax reform created the largest economic boom this country ever saw. Now, the key takeaways that they said was, number one, the tax bill cut taxes for the vast majority of Americans. 9 out of every 10 people saw a tax cut or no change in what they paid to the federal government. Number two, most Americans received their tax cut through lower employment withholding and thus bigger paychecks. That's always nice. Businesses, for number three, businesses have added jobs for 110 straight months, the longest streak on record. And there are more jobs available than people looking for them. Now, that's pretty good. That came out of tax cuts. Every time major tax cuts went into effect, it stimulated the economy and government revenues grew. After the Woodrow Wilson years of high tax and spending, Calvin Coolidge came along, and he cut taxes across the board. It stimulated the economy so well that they called that period of time the Roaring Twenties. Now, JFK also proposed a tax cut, and he gave a famous speech where he pointed out that tax cuts always stimulate the economy. JFK knew it. Now, JFK was then assassinated, and for the first time in American history, I believe, out of respect for the assassinated president of the United States, the Congress just passed his budget without any question. All right? So JFK's tax cuts went into effect, and guess what they did? They stimulated and created the greatest economic boom that we had ever seen up until that time. Now, I'm going to use the Reagan era to explain how it works. Democrats don't want to hear it because tax cuts let you, the taxpayer, the American worker, keep more of the money that you earned. And the simple truth is that Democrats believe that that money is theirs, that it belongs to them. They believe that you work for them now. I mean, we have the 13th Amendment that bans slavery, and the definition of slavery is that you work and someone else reaps the rewards of your labor. Okay, so prior to Reagan being elected, we had that Democratic Party prank known as President Jimmy Carter. And under Carter, taxes were high. I believe they were 70%. If I'm wrong, somebody tell me in the comments below. All right. But when taxes hit 70%, the rich do not invest their money in the economy. I mean, can you blame them? So the rich looked at it as, okay, so I'm going to invest my money in a business and I only get to keep 30 cents out of every dollar I earn. Screw that. So what they did was they took their money and they, instead of investing it, they put it into things like tax-free municipal bonds, like the Kennedys do. All right. And that money sits there in their tax shelters doing nothing but earning interest for the rich. And everyone else suffers because there's no investment. okay, the country goes stagnant. Now, Ronald Reagan came along and he convinced Tip O'Neill, the Speaker of the House at the time, who was a Democrat, to take seriously a tax cut. So Reagan got the taxes ultimately in the end down to 28%. So he went from 70% under Carter to 28%. So now the rich said, whoa, now I get to keep 72 cents out of every dollar I earn? Okay, let's do it. So the rich released their money from the tax-free muni bonds or whatever tax shelter they use, and they invested it in businesses. Now, it takes a little bit of time for a new business to get up and running and to see the benefits of it. Now, snarky Democrats will always tell you, they'll say, the day after a tax cut is implemented, like, well, where's the money? As if the rewards of tax cuts are going to come overnight. But see, what always happens is when new businesses spring up, or if a current business expands because of a tax cut, who do they get to run those businesses? That's right. They hire people to work those jobs. When more people work, what do? That's right. They pay taxes. So when taxes get increased, there is no investment because the rich are not stupid. They hide their money from the tax man. And that kills an economy. It makes it stagnant. But at the same time, we see that when taxes are reduced, it stimulates growth because the rich want to make money and they're pretty good at it. And so they invest their money into new businesses or they expand their current businesses. And a lot of people get jobs who didn't have jobs before. Now, those new businesses, they pay taxes that were never paid before because the businesses weren't around. Okay. The same thing with the employees. The new employees pay taxes along with the businesses paying taxes because they never paid them before because they didn't have that job before the rich guy created it. Okay, so not only do working class people have more money in their pocket because they got a job and they're paying less taxes at the same time, but government revenues go up each and every time. I mean, if they're collecting more taxes, more people are working, it expanded, there's more businesses, more people working, they're all paying taxes. So the volume of it, that increases government revenues. I think under Reagan, I believe that taxes, when he first took office, were at $550 billion. Again, somebody correct me if I'm wrong. And they went up to $1.2 trillion. He almost doubled it by the time he was done. Now, here's the simplest way that I can explain to a leftist, a Democrat, if you will, who asks you how you're going to pay for a tax cut. Let's make it really simple for them because they're not very bright. Suppose you have a box and there's nothing in the box. It's empty. Okay, now you put $1 in the box, okay? So now you have $1 in that box, right? Okay, so along comes some guy who's selling chocolate bars. You love chocolate bars, so you want one. So you ask the guy, how much? The guy says $1. So you open the box, you take out the dollar, and you hand it to the guy, and he gives you a chocolate bar. That's called commerce. See how simple this is? Now, this is the part that gets fuzzy for Democrats because, as I said, they're not that bright. Now, what if you never put the dollar into the box and you have an empty box? So the guy with the chocolate comes along and you ask how much, and he says $1. You open your box, there's nothing in there. So you can't buy the chocolate bar. Now, here's the really important part. By you not purchasing the chocolate bar for $1 because you didn't have $1 in the box, did you affect spending in any way? No, you didn't. Spending was not an option because you didn't have the money. So if you didn't spend any money, you didn't buy anything, then what the hell did you have to pay for? See, the dirty little secret is that the Democrats don't want to tell you is when they say that they have to pay for a tax cut, what they're really telling you is that they are going to spend the amount of money that they want to spend, regardless of whether or not they have the money to do it. That must be nice, right? Except that it says nowhere in the Constitution that the federal government has the right to put everybody in America into debt. And that's what they do. And that's what they do each and every time that they spend money that they don't have. Now, you and I, we got to stick to a budget every year, right, to live our lives. Tax and spend politicians don't have to do that. Democrats especially don't like that. Because, as I said before, they think that your money belongs to them. In fact, if I remember correctly, one time President Bill Clinton was giving a speech somewhere, and he argued that the Republicans want to do tax cuts. They always talk about cutting taxes because they think that that money belongs to them, meaning the people that they represent. That is the mentality of the Democrats even today. They think that your money belongs to them. They're confiscating it from you and they think it's theirs. So when you hear a Democrat now ask, how are you going to pay for that tax cut? Now you know that they're either lying, they don't understand simple economics, or both. It's probably both. So I'm going to put this heritage story, I'm going to put the link to it down in the description. So please visit RPW Media to read all of our stories. So that's it. Thanks a lot. Thanks for being with us, and we will see you in the next one.